We go back in time and take a look here. I still believe, and I know this goes against most people's belief, which is usually what happens at major extremes, is I do think we're actually going to see the dollar have a very big move to the upside. Overall, we have a series of higher lows, a series of higher highs. This is a mega channel or trend to the upside. And if the stock market is going to start to break down and things fall apart, we tend to see the US dollar do very well. The US dollar had a big move back in 2008 during that crash. It posted a 26% move back in 2000. We saw another big move up here, 16% or so during that crash. Usually the dollar becomes the dominant safe haven, kind of this overall dollar futures starts to rally, and we're starting to see that come to life. As Canadian investors, for those who are Canadian, if we take a look at the US dollar, Canadian dollar here, let me grab a pencil. I talked about this. I drew on this. This was several weeks ago. We talked about how we have these major turning points. Over here, this is a major turning point where people give up on the dollar. This is where typically the stock market, there's a major change. And this is typically when those who don't have a game plan, don't understand what's going on, they typically bail out of an investment. Over here, a lot of people, usually there's a big turning point in the financial system, something's going on. This is where a lot of people will get into the US dollar, kind of paying a high. And then of course, we're back into this phase I've been talking about, that people are giving up on the US dollar and they're moving to Canadian dollar. And these are major turning points. This happens with the stock market as well. I've gone over this in great detail. Typically, most emotional people will make decisions at the wrong time. They chase after a big move, they change strategies, and they do the same over here. They bail out and they change strategies at key turning points. And I believe we're starting to see a bottom here, very similar to this leg up. I think we're starting to see a leg up like this that could lead into something much bigger going forward. And we talked about this in a mentoring session a week or two ago as well, and how I believe there's not a whole lot of downside left in this, that there's more upside potential. And this is a good opportunity to get in. If the Canadian dollar exchange was about to break down, it'll have a clear exit signal very close, but it has a lot of upside potential to continue to mature. So holding US dollars is still what I do. I hold mostly an entire portfolio actually is in US dollars. From that perspective, I like what I'm seeing here, and we have had a very nice run. I wouldn't be surprised if we see some hiccup or pause. Again, this is the daily chart. If we look at the monthly chart, let's take a look at the monthly chart and just zoom in here. This chart, you can see we've poked up into these upper levels. Each time it's got up to these levels, we have seen a bout of selling. This is a massive, I'd like to say bull flag, but overall it's a little bit big of a flag. Typically, if the flagpole is this large, the flag shouldn't be that long. You never see a short pole in a massive flag longer than the pole. It'd be dragging on the ground if there was no wind, if you were to look at it that way. But overall, this is a giant launch pad and is holding its ground through support level here. In fact, if we go to the daily chart and just zoom out a little bit, we can go way back here. In fact, if we were to just draw a box through here, this is a pretty critical level, right through these highs, right through the middle of all of this noise, and these highs and lows. This is a very critical turning point for the US dollar to find some traction. The Canadian dollar exchange is starting to rally. Obviously, let's get out of the way here. It's up here. It is very close to moving higher. So that's my take on the Canadian dollar and exchange rate for that. Okay, let's take a quick look at a few other commodities here. Let's take a look over at gold. Gold continues to be building this bull flag pattern. It is consolidating. It's deciding, trying to figure out if it is a top or if it is a pause. Obviously, we've had a little bull flag pattern here. We had another, this is the monthly chart, another multi-month bull flag here. We had a pause and pullback here, and we are in another significant move right here. Now, overall, this pattern is very similar to what we saw in the performance that we've seen in the past couple of years. Is very similar to 2007. This could show a big blow-off move if it does start to run to about $4,100 US. If we look at the 2008 comparison, we have very similar market conditions. Long story short, let me just zoom out here. We are in this potential phase right here where the stock market is poking to new nominal highs. We've covered this chart many times. We're poking, to, let me just draw across here. We're poking to new nominal all-time highs, which we did right over here. Gold was trading right up at all-time highs. It had a bit of a consolidation, just like kind of what it's been doing here. This yellow line is gold. And then, of course, as the stock market really started to break down and sell off, we saw gold shoot higher for that last significant run. And I think we could start to see the stock market at any point start to sell off in a significant way. And gold is going to shoot up as that last hurrah, that last push, that emotional move to as a defensive play to the upside. So very concerned where stocks are going here. Bullish on gold, but we do need to see if gold is going to break free. But overall, we keep having people wanting to know about gold every single day. You missed updating on gold. Nothing has changed in gold. If you follow my analysis, you know the story has been the same. We've been consolidating here for 1, 2, 3, 4 months. Nothing has changed. We're waiting to see if it's going to break out and have some legs to the upside. It could become a discretionary play. I may want to play this move with an ETF like GLD or the Sprott gold ETF for a play to the upside. But overall, we just have to let it play. Just because it's going sideways doesn't mean anything dramatically is changing. It's just in a pause. If we look at silver, which again, I don't recommend silver or miners because they're just volatile and noisy. Big sell-offs, huge pops and drops. That's the monthly chart. If we go to the daily chart, you get a better feel of the noise. You can see it pushes up and then it sells off. Again, most people go into silver because they want to make more money, but typically it creates a lot more noise. It creates a lot more frustration. And I know a lot of people keep emailing us saying they're really frustrated, and silver miners have done a lot of damage to them, which probably means they literally have been buying after these rallies and buying at the high, and they've pulled back. If we look at SILJ, again, this is just a sign that people are emotional, and they see a big pop up and a gap higher, and they're buying these highs if they're saying they're taking losses on silver and silver miners, because it's really, pulled back recently. That means they must have paid a high. And that's what we're trying to avoid. That's what our whole newsletter does. This is what we focus on, as I try to not get you sucked into this hype. Don't go for the big swings and hope you're going to make money. And I know there's the whole silver side. Everybody talks about the silver squeeze, the short squeeze that's coming. I've heard that for 25 years. And the collapse of the US dollar, which it's never collapsed yet. Until it proves itself, we don't really want to do that. Silver's tough. And silver